Big issue for commercial banking as well. Wendy Stewart of Bank of America saying next year will be a year of change and uncertainty. Certain sectors and industries will benefit, others may not. I'm pleased to say that Wendy joins us now for more. Wendy, welcome to the program. I'm just thinking of the long list of things that your clients have to confront in the next 12 months. Taxes, tariffs, the prospect of interest rates not coming down as fast as maybe we thought they would only 2 months ago. What's the number one issue in the conversations you have at the moment, Wendy?
Good morning, Jonathan, and thank you for having me. So, when you think about our clients in global commercial banking at Bank of America, we work with over 15,000 middle market companies that are based in the U.S. and Canada, and they also do business around the world, and we cover their international subsidiaries. And these clients are publicly traded companies. They're also privately held companies, and we're continuing to see the generation transfer from the second to the third and the third to the fourth gen. And so, when you think about all of the things that they're faced, there is a lot of uncertainty as we go into 2025. And you mentioned a lot of the things that are top of mind for them. Increasing considerations around tariffs, taxes, interest rates, inflation, and then also just the geopolitical tensions that we've seen. And, let me give you an example. We have a lot of clients over the last 18 to 24 months that have looked at what is happening geopolitically. They do a lot of business in Asia, and as they've looked at their China Plus One strategy, they have moved some of that business into Asia. And also, they've also moved that into other parts of North America, specifically into Mexico. And you all have been talking a lot about tariffs and what will that mean for clients. And we've got a lot of question around that still. But I can tell you one of the things they're focused on in Mexico right now is the deflationary environment with the peso. And so we've been working with our clients to help them with that. And I do think that while we see a lot of uncertainty, we are looking at how we turn that into opportunity.
Well, Wendy, let's talk about that a little bit more. Are they in a position to play offense, or are you finding them holding back on making big investment decisions, big capex decisions until they've got the clarity on policy into next year?
I would say they're not making big investments, but they are making targeted investments. And so, we have seen a lot of good opportunity for our clients, especially, when you think about investment banking. And these aren't necessarily some of the M&A that would hit, the headlines very broadly, but clients are looking at opportunity to make those targeted investments. And I'll give you an example. We have a client that's based in the southeastern United States, privately held company, and this company did not have an exit strategy. They wanted to take some liquidity off the table, and they were looking at that liquidity event. And so in the meantime, we had another client that is based in Europe. That company did not have any U.S. exposure. And so these two companies, we introduced them, and it was a great fit. It enabled the Southeastern company to have that liquidity event they were looking for while also retaining a minority stake in the company. It then allowed the European-based company to have that U.S. exposure that they wanted, and we were able to leverage our international expertise to help with that specific transaction.
Wendy, this really raises a fascinating question, which is how much are you seeing a rush of foreign companies looking to partner with a U.S. company to get ahead of any potential tariffs or any potential actions from President-elect Donald Trump?
We are seeing that. And, I don't know that I would call it a rush. I think we've had ongoing interest all year as companies around the world are looking at how they can diversify into the United States. The middle market client base that we cover is very attractive to them, and we are in a great position to help make those introductions and to see, where those fits would make a lot of sense. And we will continue to do that.
Is there a level at which borrowing costs become prohibitive for some of these companies to expand in the U.S., especially if they're smaller? And we're asking this question as small caps outperform at a time that yields are historically relatively high, at least based in the past 10 years. Is that a concern, or is that not even on the table?
It's not on the table. When we were looking at the interest rate environment in the U.S., we were expecting that to continue to come down later this year and into next year. And for companies that are outside of the U.S. and might look at exposure into the U.S., there is the ability to manage that interest rate exposure globally. And, they can certainly take advantage of borrowing in different currencies depending on what their needs are.
Do you get the sense, Wendy, going forward, that there has been certainty for some of these smaller companies in different regions to expand, to hire, to make some of the decisions that we heard were stymied by some of the political uncertainty prior to the election?
Absolutely. I mean, when we look at our clients, I would say the sentiment's interesting right now. There is a lot of optimism, and I think there is some pent-up demand. You know, clients, I think, have been a bit surprised that the economic environment has been more stable than they were expecting. That combined with interest rates coming down and that demand is creating opportunity. You know, and we continue to work with our clients not only as they focus on the geopolitical tensions, what that means for them internationally, but also here domestically. And, you know, we are continuing to do a lot with clients with the core banking needs that they have, whether it's loans, deposits, really helping them to manage their cash management process. And, you know, we have a new client that we've started working with that's based in the Midwestern United States. And this company is also doing business in Canada. They have exposure in two geographies outside of North America in two different regions. And when they looked at that entire cash management ecosystem that they had to manage, they were doing it on a very manual basis. They didn't have a lot of visibility. They had FX risk that they wanted to take off the table. And so we helped them with our Cash Pro system to put a solution in place. It is the platform into the bank that is both online and mobile, and it's enabled them to really manage all of this exposure and continuing to grow in a way that is safe, secure, and very efficient.
Wendy, you've given us some really specific examples, and I was just noting down some of the themes: managing the supply chain in Asia, managing the FX exposure, particularly down in Mexico, getting a presence to the United States, working that out too. Wendy, what I hear here is the need to be with a bigger player, and that's what we saw coming out of the regional banking crisis as well. Customers were looking to the Bank of Americas of this world. Wendy, is that still the same now? Have you held on to those clients? Are you seeing more clients come towards you ahead of 25?
We are, and in fact, 2024 has been a great year for us. It's our second strongest year in terms of client acquisition on record, and we expect that to continue into 2025, and it's for all the reasons you've just cited. You know, our client base is more global now than ever, and they absolutely need a partner who can help them navigate a lot of this uncertainty and turn that into opportunity for them to help them grow.
Wendy, this was brilliant. A belated happy Thanksgiving to you and to your family too. Thanks for being with us. Wendy Stewart there of Bank of America.